US President Biden leaving the US election races dominates the new market headlines. Still, markets don't draw any firm conclusions yet. The news as such isn't enough to abruptly close the Trump trade that at some occasions was built out recently. Higher LT yields, a stronger dollar, and uncertainty in equity sectors that might be affected by a more protectionist US trade policy. US yields are declining slightly marginally, 3 BPs. The yen slightly outperforms, USD JPY 157.15. Today and tomorrow the eco calendar in the US and EMU is thin. Later this week, the July PMIs, US and EMU, the first reading of the US Q2 GDP, including price deflators, and the real start of the earnings season have market-moving potential. US yields bottomed, 2Y 4.40% area, 10Y support 4, 15%/4, 20%. We see further consolidation going into next week's Fed meeting. The dollar also shows signs of bottoming, but the move for now isn't impressive either. EUR/USD 1.094881 is first resistance USD support, which we don't expect to be broken easily short term. Hello everyone! Welcome to our channel. Today, we delve into the critical intersection of corporate governance and climate change. As Taiwan faces increasing climate risks, effective governance practices are essential for building resilience and ensuring sustainable development. Join us as we explore how corporate structures and policies can significantly impact carbon emissions and environmental sustainability. Integrating climate concerns in corporate governance. The Earth is warming, ice caps are melting, sea levels are rising, weather patterns are shifting. We are facing a global crisis. It is time for action. Businesses must embrace sustainability. Integrate climate concerns into core operations. Corporate governance is key. Mitigate risks and seize opportunities. Transition to a low-carbon economy. Companies that adapt will thrive. Investors demand climate action. Sustainability is good business. The time to act is now.
Governance practices for climate risk management. Climate change presents significant risks to businesses. Extreme weather events can disrupt operations. Changes in regulation can impact profitability. Resource scarcity can lead to instability. Effective governance practices are essential for navigating these challenges. Companies must first assess their climate risks and opportunities. This involves understanding their carbon footprint. It also requires analyzing their supply chains. Once risks are identified, companies can develop mitigation strategies. This might involve investing in renewable energy. It could mean improving energy efficiency. Robust governance also emphasizes stakeholder engagement. Companies need to communicate transparently about their climate actions. They should seek input from investors, customers, and communities. This fosters trust and builds resilience. By embedding climate considerations into decision-making, companies can create long-term value. They can protect their assets. They can enhance their reputation. They can build a more sustainable future.
Section 3. Taiwan's carbon footprint. The link between governance and emissions. Taiwan, a vibrant economy in East Asia, faces significant environmental challenges. Rapid industrialization has come at a cost. The island nation has a high carbon footprint. Air pollution is a concern in urban centers. Climate change threatens Taiwan's delicate ecosystems. Addressing these challenges requires a multifaceted approach. Corporate governance plays a crucial role. How companies are governed directly impacts their environmental performance. Strong governance promotes transparency and accountability. It encourages the adoption of sustainable practices. Taiwanese companies operate in a globalized market. They are facing increasing pressure to reduce their environmental impact. Investors are scrutinizing their sustainability performance. Consumers are demanding eco-friendly products. International regulations are becoming more stringent. In this context, integrating climate concerns into corporate governance is not just an ethical imperative, it is a business necessity. By doing so, Taiwanese companies can enhance their competitiveness, mitigate risks, and contribute to a more sustainable future.
Section 4. Unpacking the evidence, ownership structures, and their impact on carbon emissions. Numerous studies have explored the relationship between corporate governance and environmental performance. Research suggests that companies with strong governance structures tend to have lower carbon emissions. They are also more likely to invest in renewable energy and adopt sustainable practices. Ownership structure, a key aspect of corporate governance, plays a significant role. Companies with concentrated ownership, where a single shareholder or a small group holds a majority stake, often exhibit weaker environmental performance. This is because these companies may prioritize short-term profits over long-term sustainability. On the other hand, companies with dispersed ownership, where shares are widely held by a large number of investors, tend to be more environmentally responsible. This is because they are subject to greater scrutiny from investors and other stakeholders. Furthermore, the presence of independent directors on corporate boards has been linked to improved environmental performance. Independent directors bring objectivity and diverse perspectives to decision-making, which can lead to more balanced and sustainable outcomes.
Innovative solutions for Taiwanese electronics manufacturers. Taiwanese electronics manufacturers, key players in the global supply chain, are facing unprecedented challenges. Geopolitical shifts, trade tensions, and technological disruptions are reshaping the industry landscape. To thrive in this dynamic environment, companies must adapt and innovate. One pressing issue is the need to diversify supply chains. The COVID-19 pandemic exposed the vulnerabilities of relying too heavily on a single source for components. Taiwanese companies are exploring alternative manufacturing locations. They are also seeking to strengthen relationships with new suppliers. Sustainability is another critical area of focus. As global demand for electronics continues to grow, so too does the industry's environmental footprint. Taiwanese manufacturers are investing in energy-efficient production processes. They are also developing more sustainable products with longer lifespans and greater recyclability. Innovation is crucial for navigating these challenges. Taiwanese companies are at the forefront of developing new technologies. They are investing in research and development to create cutting-edge products and manufacturing processes. They are also fostering collaboration between industry, academia, and government to drive innovation.
The Yi-Jing offers insights into change and interconnectedness. Its principles of balance and harmony guide modern carbon markets. Yin and Yang highlight the need for a balanced approach. Carbon markets are dynamic and evolving. Investors must adapt to market trends and regulatory changes. Prioritize projects that reduce emissions and enhance well-being.
Section 7. Balancing carbon taxes and credits. Carbon pricing mechanisms, like carbon taxes and cap-and-trade, are key for climate change mitigation. They incentivize companies to cut emissions. Effective policies need a balanced approach. Carbon taxes charge per ton of CO2e emitted. This signals polluters to reduce emissions. It promotes investment in clean tech. High taxes can burden industries. Cap-and-trade sets emission limits. Companies trade permits within the cap. This creates a market for reducing emissions. Robust monitoring is essential. Harmonizing policies globally is crucial. International cooperation is key for climate goals.
Section 8. Towards a greener future. The role of corporate governance in a changing world. The world is changing at an unprecedented pace. Climate change, technological advancements, and shifting geopolitical landscapes are reshaping the global economy. In this dynamic environment, strong corporate governance is more important than ever. Companies face increasing pressure to address environmental, social, and governance issues. Investors are demanding greater transparency and accountability. Consumers are making conscious choices about the products they buy and the companies they support. Regulation is tightening. Strong corporate governance provides the framework for companies to navigate these challenges. It promotes ethical behavior, risk management, and long-term value creation. It fosters trust with stakeholders and enhances corporate reputation. By embracing sustainability and integrating ESG factors into their operations, companies can create a more sustainable and equitable future. They can reduce their environmental impact, contribute to social progress, and create long-term value for all stakeholders. Section 9. The power of transparency and accountability, driving sustainable practices. Transparency and accountability are cornerstones of good corporate governance. They are essential for building trust with stakeholders and ensuring that companies operate ethically and sustainably. In the context of climate change, transparency means disclosing environmental performance data, such as greenhouse gas emissions, energy consumption, and water usage. Accountability means setting clear targets for reducing environmental impact and reporting on progress toward those goals. It also means being held responsible for any negative environmental impacts caused by the company's operations. When companies are transparent about their environmental performance, it allows investors, customers, and other stakeholders to make informed decisions. It also creates pressure on companies to improve their environmental performance.
Section 10. A global imperative: collaboration and action for a sustainable future. Addressing the challenges of climate change requires a collective effort. No single company, country, or organization can solve this problem alone. Collaboration is key. Governments, businesses, civil society organizations, and individuals must work together to create a more sustainable future. International agreements such as the Paris Agreement provide a framework for global cooperation on climate action. These agreements set targets for reducing greenhouse gas emissions and provide mechanisms for countries to work together to achieve these goals. However, agreements alone are not enough. Concrete action is needed at all levels. Governments need to implement policies that promote sustainability. Businesses need to adopt sustainable practices and reduce their environmental impact. Individuals can make conscious choices to reduce their carbon footprint.
Building a sustainable and equitable world. The choices we make today will determine the future of our planet. We have a responsibility to leave a healthy and vibrant world for generations to come. Embrace sustainability, equity, and well-being for all. Protect our forests, oceans, and biodiversity. By working together, we can create a future where both people and the planet can flourish.